Welcome to Between Two Chairs, Demystifying Commercial Real Estate, the podcast that brings you the latest insights and trends on the South Florida commercial real estate market, with your hosts, Fernando and I Jr. and Jennifer Woolman. In each episode, we dive into the world of commercial real estate and break down complex concepts to make them accessible for everyone. Whether you're a real estate professional, a curious investor, or just interested in the South Florida market in general, Between Two Chairs is the podcast for you. So pull up a chair and join us.
Welcome, everybody, to another episode of Between Two Chairs. My name is Fernando and I Jr., and with me, as always, is the very technologically advanced Jennifer Woolman. Jennifer, say hi.
Hi, everybody.
For those of you who don't know, Jennifer just got a Tesla, and she's baby steps. She's learning. She knows.
I'm not technologically advanced.
Listen, she's already learned that she doesn't have to turn it off. She could just get out of the vehicle, and that goes a long way. I'm sure. You're looking for a button to push. I love it. I love it. Oh, we have a very special episode today and a very special guest. So I'll leave it to you, Jennifer, to introduce our special guest.
Perfect. Hi, everybody. Today, we're lucky to have Carmen M with us. I met her at Beth Azor's Women Investment Summit this year, and she is a concierge tax strategist, and her company is Carmen M. And we just thought it would be great to have a conversation about how to save on taxes, tips and tricks. And we will include her website, which has a ton of great resources on it on the show notes. So Carmen, welcome.
Thank you. Thank you for having me here. It's a pleasure to be here and talk about a subject that I really, really enjoy. And I'm looking forward to the opportunity of giving you guys some value after we're done.
I love that. And thank you for saying, that you love taxes and the subject, because as a real estate broker and investor, I love the tax strategies and the tax benefits that real estate provides. So I hope we get into that a little bit, as well as to tax strategies for independent contractors, etc., because I know you're a small business owner and have special tips on that. But before we get started, can you tell us a little bit about yourself, where you were born and raised, where you went to school, what makes you tick, what you like to do besides tax?
All right, sure, yes. So I'm a South Floridian, but originally born in Cuba. And I always loved math. I remember asking Santa for an adding calculator with like the tape. I even said with the little tape. And I used to go and pretend I owned like a little store and had like toys, and would tell my sister, come shop, and just the clicking and the clicking. So I think that it goes back to fifth grade, actually. So born in Cuba, raised in South Florida. I went to FIU, where I got my bachelor's in accounting. Then I did my master's in taxation, and then met my business partner. Then we went into business together, had a traditional accounting firm for many, many years, in the typical accounting firm where we have a lot of clients and doing a lot of bookkeeping and tax prepping. And it was always at the end of the year when we were doing their tax returns, especially for the business owners, which that was the majority of our clientele. The frustration of like, wow, I owe that. Is there something else that we can do? And to be honest, when we go to school, there was only one tax class that we took. And nowhere in those 4 years do they teach you how to do a tax return. All of that is learned on the job. And I remember like, wow, well, I guess you had a good year, and with the mindset of that's what we have to do, pay taxes. And then somewhere down the line, I came across, a certification for tax planning that was very easy for the tax background that I already had. And we decided to shift and lead with tax planning. And wow, something that was never taught to us in undergrad, or even when you sit for the CPA exam, was this thing called tax planning, which back 2017 when I got certified, nobody was talking about it. And it was really the shift that turned it all around, because wow, in this that I already do, or we already do, we can actually bring more value to the client and tell them we can all save on taxes if we can strategize and use that plan proactively, not wait to the end of the year and kind of look back when it's already too late, but kind of like do it along the way. And we kind of shifted the entire model to allow space for that, because we're burned down till October. And
Yeah.
then the holidays come and nobody wants, to work. And then January comes again and we start the tax season over and over again. And after about 21 years in the firm, I decided, you know what, I want to absolutely lead with tax planning, went on my own, started a solo firm virtually so we can touch more clients and be more accessible with less clients, but doing more, because it does take time and you can't do it, in the old model that we had with about, 10 employees, over 400 clients. And this is the space where I live right now. And it's very gratifying when we do a plan, we close the year, the clients see the benefits of what we planned and implemented. And that still is in an industry that there's a lot of work and deadline. I still find my passion in accounting and tax, and I can enjoy it without being burned out.
I love that. And I love the fact that you're talking about tax planning, because I remember when I started working and I paid a huge, my first year working, and I paid a huge amount of taxes, and I was complaining, and my dad's like, stop complaining. That means you made money. And I'm like, okay, but I should be able to keep it. And then when I became a broker, like one of my best years ever, I thought I had, set it up so that I was going to be able to pay minimal amount of taxes. And then, no, I got hit with a huge bill. And it was after the fact that I went back and I'm like, okay, I need to do better. What can I do so that I keep more money? So can you tell us, because we have a variety of listeners, some are actual brokers and some are investors. So I'd like to start on the broker, independent contractor, small business side, especially since you're a small business owner. What are some of the tax planning strategies or recommendations that you would say people need to focus on during the year, right before the end of the year? Because once the year's over, it's a lot harder to do the tax planning because you have to spend or make those changes during the actual year when the income's incurred, correct?
Correct. Yes, good question. Yeah, definitely. One of the things that we like to start off, which happens a lot in this industry with independent contractors, they're 1099 and they're not in the right structure. So we like to look at what entity do they have and how is that entity being taxed. You want not legal advice, but what I've been told personally, if you're going to be in an operating business, let's make it official so that we're not commingling, you have that protection and you can take all the expenses that are allowed by doing it the right way. So first, are you incorporating it? Even if you're not, are we being taxed the right way? Do we qualify to be, say, for an example, an S Corp, that just having your LLC be taxed as an S corporation, now we're saving on self-employment tax. So as you know, with a 1099 that goes on your Schedule C, without being too technical, you're going to pay federal income tax plus self-employment tax. That's another 15.3%. And while most of our small business owners think that they don't make enough to incorporate or make that election as an S Corp, it's always good to run the numbers with your accountant and your CPA. Okay, kind of like, what does it look like if I stay like this, and if I switch to an S corporation and draw salary, because you have to draw reasonable compensation, what does the tax look like? Most of the time, 9 out of 10, you are always better tax wise as an S corp. Schedule Cs are 15 times more likely to get audited, because a lot of people like to cheat or put excessive expenses there, and they're in business but they're always drawing a loss. As an S corp, you're less likely to be audited, so you have that protection. Also, by being an S corp, then things that you can also do is set up a solo 401k or any type of retirement plan where you can take that business deduction for the company match and the salary, and now you could either self-direct that retirement account or in whatever you like. If it's real estate, Bitcoin, in another small business, self-directing allows you to do that, but it is work and there's a lot of rules. And if you don't want to do that, at least put it in somewhere, even if it's in Wall Street, aside from that, because it gives you a lot of flexibility. SEPs and other types of retirement account you can do. I personally prefer case because, one, you can borrow from it and then you can pay it back within 5 years. You're paying yourself back interest, and you can max it out. There's additional matching that the company does. That's a great deduction. Another thing that's good for the small business owners is having a health savings account, an HSA. That's super powerful. It's a deduction, and it's not subject to income limits. So you can do that as long as you qualify. You need to have a high deductible insurance plan. But if you're kind of healthy and you're not using it, you just have it in case something happens, why not elect a higher deductible health insurance plan when you're saving on premiums? Because usually the monthly premiums are cheaper, and you're putting that money towards your HSA that you can go back and reimburse yourself and have it there grow tax free, because the earnings are not taxable. The distributions for medical expenses are not taxable. And when it's going in, you're getting a business deduction. So that's like a low hanging fruit that a lot of small business owners miss. And things like, well, if I have children, can I hire my kids to help me and do things around the business and teach them like financial education and getting paid, and have them pay for their expenses, and kind of like financial literacy, that they don't, it's not too early to teach them that. And put at least about 10-15% in a separate account for those estimated tax payments if necessary, so that at the end of the year you don't get a surprise bill. Make those estimated tax payments if you're required, or work with a tax advisor that can help you put those monies into other strategies that would lower that bill at the end of the year as well.
Wow.
I know. I took so many notes. This is just awesome.
So I love that you did say about putting money away for taxes, because I remember when I first got my license a gazillion years ago, my girlfriend said, "Don't make the same mistake I did. As soon as I got my commissions, I spent all this money, and I thought my husband was going to kill me, because at the end of the year I owed 50 grand and I had zeros."
Yeah.
Yeah.
So I love that. Do you recommend that clients put money in like different, I've heard different silos, so you'll have, pay yourself first, so that would be your savings, your IRA, right? And then you make sure you have another silo for taxes, and then another one that you live off of, right? Do you kind of see things that way?
Yeah, if you're like that, wow, I got this commission check, and you go spend it, yeah, we do recommend that. Obviously, we want to take care of, make sure that we take advantage of all these expenses, such as your home office, that you qualify, and you take all those business expenses that you can to bring that tax bill down. And if at the end of the year you oversave, well, great, because now, that could be either you roll it in if you didn't use it to the following year. And it kind of like calms the nerves knowing that, wow, whatever the tax bill is, I already saved for it and here it is. Or then if say you save 20,000 and you only owe 10, where can you put those 10,000? So because we want you to save money in taxes, yes, and then always with the idea, how can you redeploy those savings so that the money's growing and it's continuing to create wealth for you, where that could be for my next rental property or a new multi-family or a syndication or private money lending, whatever that is, but kind of always have different income streams also, not just coming from your business, but what are we doing on the investment side? What do you like? What are your goals? And kind of like have it coming from, different angles.
So I love that for tons of information for independent contractors and small businesses. So let's talk about how real estate can help lower tax payments. So let's say you're an S corp, you've done all this, but you still are going to owe taxes after all of your consultations. How does real estate fit in to somebody's tax strategy? Somebody once told me that if you're in real estate and you're paying taxes, you don't own enough real estate. So I don't know if that's true or not, but I love to repeat that, especially to my customers. But can you go a little bit into that side?
Yes. So real estate is a great investment and a great tax savings tool, because especially if you qualify for that real estate professional. And let me just backtrack again, not getting too technical, but if you're a regular W-2 earner and you have real estate losses because you have a rental property, now with real estate, we can deduct things like the mortgage interest, the association, insurance, if someone is managing it for you, contractors, repairs, and the biggest one is depreciation. So depreciation, if it's residential, we can take a deduction, divide that by, back out the land, and depreciate it over 27 and a half years. If it's commercial, it's 39 years. But if we can do a cost segregation study, which is where an engineer goes in there and breaks it up into different buckets, 5-year property, 7, 10, 15, and 27 and a half, we're accelerating that depreciation in earlier in the years, because not everyone, some do, hold on to that property for 27 and a half years. So that creates a paper loss. Even though you're cash flowing, that depreciation deduction now makes your rental income and your rental properties be at a net operating loss. Well, if you're not a real estate professional, we can just carry that loss forward. It's considered passive, so we cannot net it towards your, W-2 income. But you will use it the day that you exit the property, and you can net it with your capital gain. So it's not lost. But when you have a real estate professional with rental real estate losses, they can take those losses and net it towards their other income. And that's very powerful. That's when they pay nothing in taxes, even though they're cash flowing, because of the depreciation, which is mainly the biggest expense typically on that rental property. If they do a cost seg, now they get to bring their tax liability to zero and then buy another property or two in years to come. Now, if you are not a real estate professional, you could still take advantage of that if you have a short-term rental. So short-term rentals, you have to, an average stay rented less than 7 days. So if you qualify for that, even though you're not a real estate professional and you have materially participated in the properties and all the different tests, you are able then to take that loss against your W-2 income. So that's a great deduction. Real estate with cost seg, and we always try to see how can we qualify you. How, if you're married and your wife doesn't work or your spouse does not work, how can we qualify them so they're able to take that loss against the other income? What we see also is people not consulting with a professional, go buy a property, and wow, the disappointment of I can't take that loss because they don't qualify and it's passive. But yeah, that's the benefit in real estate. Now you have a property that's appreciating, your tenant is paying for that mortgage, and you're getting a big write-off, saving in taxes in the end. So it's one of the biggest tax savings vehicle that anyone can do.
Carmen, what is, can you define, because part of what we'd like to do here is demystify commercial real estate. And this goes to something that you mentioned that was really interesting, which is when you're a real estate professional, there are certain values that you get out of doing a cost segregation study and doing that and taking that depreciation. I would assume that being a real estate professional is not enough to just have a real estate license or a mortgage license or anything, right? What are the what qualifies in the eyes of the IRS, a real estate professional?
Well, it has to be your job. Like if that's what you do full time, then no problem. The issue is when you have an unrelated full time, like me, for example, I can have a real estate license, but I'm a CPA and 100% of my work is working in my firm. It is impossible for me to be here full time and have 750 hours of real estate work to qualify for that real estate professional,
Right.
and be able to take those deductions. So just because you have a real estate license does not automatically qualify you for a real estate professional, because you can qualify as a real estate professional without having a real estate license. The hours is key. There's 7 different tests, but that's the one that case after case after case that fails, especially if you have another unrelated full-time job. So that's a big one. If you are, a sales associate and your property management, you're in real estate construction and managing and all of that, it's easier for you to qualify. Obviously, you will qualify, but you can't qualify when you have a full-time job and also have a real estate license and say, I want to take those real estate losses against my active income. That's going to be a little harder to prove.
You could imagine that over the years, I've gotten that question asked by a lot of my clients where they have 2 or 3, short-term rentals, and they're like, well, I'll just go and get a real estate license. Can I hang it with you? So, yeah, you can hang it with me. Has nothing to do with your ability to qualify for something like that. But I do like the fact that you, I think you're educating people on things, even to our audience of agents and brokers that really do not, are not aware of the value of that, of owning and managing real estate properties for yourself while you're a real estate professional. So it's incredible value there.
And one of the things I love, I was talking to Carmen and I asked her, I said, so, do you invest in properties? Do you own real estate? I mean, obviously she's a small business owner, so
Right.
her advice there totally qualifies. And she said, yes. And I'm like, I love that, because I can't tell you how many CPAs that I know and who have advised me over the years on what to do with my real estate and my investments, but they don't own anything other than their primary house. And although I'm sure they're very competent and know what they're doing, I always feel like somebody with the actual experience of having been through the process is going to relate better to my questions or understand me a little bit more clearly. So can you tell me a little bit, if you don't mind, about like your personal journey, because you've obviously learned by doing as well.
Yes, sure. So I do. I owned 4 residential rental properties myself. I also have 2 syndication projects with a good friend of mine. So there's that. I have also, in the alternative asset space, a couple of investments in the oil and gas drilling funds. I also do private mortgage, private lending, like short term, 9 months. That's every note is secure with a trust deed. And I always liked, I guess I learned because of my clients. I didn't own real estate, years and years ago, but working with clients and the common thing they had, especially the executives and the high wage earner W2. Yes, they had that big W2. They also had all their investments in stocks in the 401k, but they also had real estate. And that was like a common factor. And then just managing and doing their accounting and everything, it just felt comfortable. So then I started to dip my toes in, and always thinking that, wow, another mortgage, and getting out of that mindset that yes, you can do it, you down payment, and what can go wrong. People always need somewhere to live, so it's no matter what, things go up and down, but it's a strong market and all these deductions, and why not? So I went ahead and bought my first one, and I'm like, yeah, this wasn't that bad. And then I'm like, I'm always looking, always looking. My goal is to buy at least one every year and spread like all the savings I'm creating, where else can I put it, and in different buckets. And honestly, learning from my clients, my wealthy clients, through all the years, and also talking the talk. If I'm going to say, oh, this is great, why, if it's good enough for them, why wouldn't it be good for me? So I'm kind of like in that, and will continue to do that, because I would like, my dream, when I transition out of my firm and my practice, that real estate is where I plan to be 100% of my time, because I can go to different places, own property in different states and stuff that, have better opportunity, and have the flexibility of be able to be there, go look, manage, and kind of like real estate allows us to do that. And yes, do consulting and kind of like transition out of the firm, but real estate is where I will hang my hat after retirement.
So I love that. Sorry, you also have your own business, and we do a lot of business brokerage, and owning your own business is also a great tax strategy. So you have wonderful, options available to you, because it sounds like you're literally walking your own walk in terms of what you advise. So tell me a little bit about the business side, like why owning a business is so great, and why so many people, especially nowadays on Instagram, it seems like every other post I get is somebody hawking, learn how to buy businesses.
So I truly believe entrepreneurship is not for everyone. The idea of, yes, I have the flexibility and I can do whatever and be my own boss, it's great. But I will not lie, it's not easy. And it has its challenges, just like anything else. But if you're an entrepreneur, it's truly the way to go. Truly the way to go. And having, not starting small, and know that you don't have to know everything. You can go outside for support. So if accounting is not your expertise, then kind of like get to a place where, when you can afford it, hire the bookkeeper part-time and then full-time, and to kind of like support you in areas that you are not comfortable with. But I believe that entrepreneurship is amazing. And yes, you work more because you never disconnect, you don't punch out. You're always thinking, you're always evolving, you're always learning and training and helping. But if you have the passion, it is easy and it is better than a corporate job. I did corporate. I paid my dues in corporate when I was finishing my bachelor's and in my master's, before I went on my own. And I said, if I ever go on my own and have my own practice, I want to treat my employees the way that I wanted to be treated in corporate because it's rough. So the worst day, the most stressful day, the longest day, the most hectic tax season is still easier than working in corporate, in my opinion, or working for someone else, because at least it's for me. It's growing my business, my knowledge, my impact. And I have a good friend that had her practice, kind of like started it part-time, and she was still in corporate and not knowing whether she's going to make the switch and just rip the band-aid and do this 100%. And then her corporate employer said, hey, we have this position, we're going to promote you. And it was paying about 3 times as much as what she was originally earning. And I remember telling her, look, as good as this sounds, it's a better deal for them. I mean, hands down, right? When we think, it's like a car. When you think you're getting a good deal in the dealer, you know they're making money, regardless. They always do. So after 6 months of being there, she did make that transition, and she's been there for 6 years, and we always remember that talk. So entrepreneurship is hard, yes, but it's not impossible. It's very rewarding. And really, you have more options in the tax saving space as a business owner than that W-2 employee, hands down. The code was written about 90%, they say, to save money in taxes. The other 10% is to pay taxes. And the people that pay the most in taxes are the taxpayers that have a W-2 job. No disrespect. I mean, we need those jobs as well. But if they don't do additional things or invest in additional strategies, they are paying the most. And with that, I say, invest more, meaning we're going to have to buy the short-term rental property so that we can save in taxes. That the business owner can take advantage of business deductions and deductions in general. We're always thinking, how can we make this a business deduction and maximize on that? And they have that opportunity, and most W-2 earners do.
That's awesome. I wanted to point out you do offer bookkeeping services, right?
Yes, we do.
I love that. And my first hire was a bookkeeper before I had an assistant. I got a bookkeeper, and it was the best day of my life. I was so happy.
Carmen, let me ask you a couple of technical questions here. And again, just for everybody who's listening, this is not meant to be tax or legal advice. This is for educational purposes only. But one of the things that you mentioned about how important it is to incorporate and the structure that you have, doesn't matter where you incorporate in your.
Excellent question, because a lot of taxpayers, business owners, people think that they can incorporate in a different state for privacy reasons, and that's great. But what they don't understand or know or are aware of is that you have to register in the state that you're conducting business. So while you can incorporate in Delaware, that's fine. But if you're practicing in Florida, Florida requires that you register, not incorporate, in Florida. So you would have to, register here, register, not incorporate. And now every state, with the exception of a few, you have to then file that annual report and renew that annual state license, right, or incorporation. Now you're doing it in 2 states. You have to do it in Florida, you have to do it in Delaware. And most banks here in Florida, if you don't appear, they look at SunBiz, which is the state division of corporation. If you don't appear there or your entity doesn't exist, they will not open a bank account. They will force you to register here. Number one, you have to. But if you're like, well, who's going to find out? And they don't do it, well, the bank will not. Most banks in Florida will not open a bank account if you don't appear there. And it's just compliance. Florida requires that if you're conducting business in Florida, your business must be registered in Florida. So what did we really do?
Yeah, and it really is interesting. I'll tell you this before I ask the next question. It's an interesting anecdote. We received an offer on a multifamily building with a corporate name, and we started searching in Sunbiz, and then the names did not match the people that we were talking to. And then when we did a little bit of a deeper search, we were concerned about the people that own this entity. Well, it turns out that the entity that was making the offer was of the same name as an entity that was registered in Florida, but they were registered in Delaware. And of course we couldn't find. So then, the prospective buyer was curious, why am I not getting a response? I made a good offer, but my clients were just concerned about who are we doing business with, right? And so then they had to send the corporate resolutions, all the documentation. But that was an interesting dynamic. If there had been a lot more activity in the market, they may have just lost the opportunity, because this nowadays, that's another component of this, is with all the text messages that people get fraudulently, emails, all that stuff. I find that consumers are hypersensitive, and increasingly, especially business owners who get hit with a lot of these things, they're hypersensitive to who am I selling to, who is buying my property, even though most people say, well, once you sell it, who cares? But the reality is that there are a lot of implications for that. And so, I just thought about that when you made that comment. The other thing I wanted to ask you is, what do you think are like the top mistakes that people make, when you're dealing with business owners that are coming in, and maybe some of them own property as well. And you're at the end, and it's too late to do anything about it. But what do you see as the biggest mistakes that people make when it comes to tax planning as a business owner?
One of the biggest thing is that they think that their existing tax professional is doing planning for them. And we as accountants have to do a better job letting our clients know this is what you're paying us for and this is what we're doing. And not have the client assume that every accountant does tax planning, because it is a separate service, it is a separate skill set, and not everybody wants to do it. For example, I can represent you in front of an IRS audit. As a CPA, I can. But if you want a financial audit, for example, a lot of the condo associations, that's a service that we do not provide and we do not do. Reviews also of financial statements, formal reviews in the accounting industry, not review like I'm going to review your financials, but give you an opinion and all that. And I'm okay saying, look, that's not a service that we provide, and I'm happy to recommend this firm, that firm, and that's okay. And with tax planning, it's the same thing. The assumption that we're doing planning and I'm taking care of you during the year when they're not, and like, oh my gosh, that's like one of the things. A big mistake that a lot of business owners make is that they think that their bank statements and credit card statements is substantiation and they're not keeping receipts. That is huge. Even if you don't have all the receipts in audit, 60% is better than zero. The IRS specifically says your credit card statements and bank statements do not constitute substantiation. And that's because in Best Buy, you can buy a computer for your business, but you can also buy a refrigerator for your home, right? Which is not a business expense. So we don't know if in Costco you bought toilet paper or an Xbox. So they need to see the receipt. And another big mistake is thinking that just because I put the auto in the business name, it's 100% business. That's okay for the exterminator that has a work truck, but not for your car that you also use for business and personal, and feel if you put it under the name of the company, you don't need to keep a mileage log. And right now it's super simple with apps. You can swipe left, swipe right, and you don't even have to do it, print a report, and it's super, super helpful. Failing to have your books and records on a timely basis, because everything starts with good financials. You may think that, oh, I didn't make a lot of money this year and I have all these expenses, so I'm okay, and going radio silent, not having that up to date. And then now at the end of the year, after the year is closed, we see that what you thought were expenses are not, and now your income jumped, and oh my God, we're scrambling. I don't have the money to pay. So poor bookkeeping, books and records is also one of the big mistakes that, it's unfortunate. Having QuickBooks Online is great. We love QuickBooks Online, but thinking that a computer can classify your transactions is another misconception and a mistake, because you don't want to invest in a good bookkeeper to put it in and give it the right classification, to tell you along the way, hey, don't commingle. You can do this better. And what was this for? And do you have this, and kind of like plan for that, to capture all those expenses and have good books and records at the end of the year, that for expenses that you can justify, that won't generate a big tax bill at the end by doing it correctly.
So, that in our field and in your field, there's a little bit of a sometimes we have to play psychologist, sometimes we have to be therapist, right? And so I can hear that some people that might be listening to this, they may get a little nervous, they may get a little anxious about, oh my God, I'm not really doing this, am I doing it wrong, all that other stuff. What would be your recommendation to them, right?
Call
because
Carmen, I'm
maybe
raising
for
my
a year,
hand already.
right? No, but maybe for years they're like, oh my God, I thought I was doing this right, I'm not. It is very nerve-wracking too, because I think most people want to do the right thing, but it is a complicated code. It is perhaps purposely complicated, but regardless, it is for most people a very nervous thing to, a very anxiety creating activity to deal with taxation. So, I would love your perspective on that.
So and I understand that that's not what you're supposed to know. That's why you work with us, and then we kind of guide you. There's never any shame, like you didn't know, you don't know what you don't know. And we just wipe the slate clean. We fix what we can fix, and we do what we can, and we educate you. Not because we want to bore you, but we don't want to be that accountant that tells you you can't do that, and then not give you the reason why, or offer a solution, but you can do it like this, pay your kids. Yes, but this is how you can do it, and this is what you need to do. Not, I heard that I can pay my 9-month-old 15,000 and get a write-off to work in your law practice. Like, really, like, what can your 9-month-old do in your law practice to get paid 15,000? So it's a lot of educating, it's a lot of communicating, it's a lot of hand holding, and that's what we do. And that's the difference too, right? The general public thinks that, we don't want to talk to you. We see you once a year. We just want to charge, bill you by the hour, which we don't bill you by the hour. And they don't see the value of checking in on a monthly basis, knowing that here are your financials. This is where you're at. These are the notes. No, you can't do that. Do this instead. Hey, what about this and that? Like that ongoing communication. If you want to be like, I only need to see you once a year, then we're not the right fit for you. We want to educate you. Right now, there's a lot of information out there that people are like, oh, wow, I didn't know. And I've been to conferences. Last year, for example, I went to a multifamily conference, and I was there as an investor and learning and all the things. So I was just quiet, but wow, it was so eye-opening how many people didn't know what an LLC was. Oh, I should have my rental in an LLC because this and that. Or what is it cost? What is depreciation? I'm like, wow, we have so many people out there that still don't know
Yeah,
a lot of things. And
for sure.
it's no shame. It's correcting,
Yeah,
is fixing, is
good.
letting you know how to do it. And no CPA should make their client feel bad because they didn't know something, or they failed to do something. Just work with them, teach them, educate, work together, as a team, how it should be, so that you can hold their hand and, have it be a successful relationship.
So there you go, Jennifer. We have it on record that when we go to Carmen, there's going to be no shame. I love it.
So I also wanted to point something out that you said that there's so much information out there, but there's also a lot of bad information out there. And I think, don't go cheap on your attorneys or your accountants and tax advisors.
Right.
Because there's a lot of bad advice. Don't try to do it yourself in terms of, oh, well, I'm going to go to YouTube and see what the best way to set up is. Because one, you don't necessarily know what the person's credentials are. And two, even though that might be right for that person, it might not be right for you. Do you, when you're working with clients, do you work with like an investor's team? So do you work with their financial planner, with their attorney to figure out, given what they're trying to do, what the best, because you had said, what is your best holding company? Is it an S Corp? Is it a C Corp? Is it, whatever. So, and I know that there are different structures for different, events or those different buckets that we were talking about where you put your money. So do you work with people's teams, and what does that look like?
Definitely. We always start the client's in the middle, like in the center. And we touch everything. We entity structure, retirement, financial, attorneys, a lot. It's funny, people think that an operating agreement, I can just download, get a template, go to Sunbiz, but they don't take care of their annual corporate minutes. And that's one of the things that's technically, it's piercing that corporate veil. So if someone goes after your company, and wants to dismantle it and go through that to you, they're like, well, you didn't behave like a company. So why should we respect that? You don't have your annual meetings, you don't have your corporate minutes. So there's commingling, right? Personal and business. So you're piercing that corporate veil. So it's important to work with the attorney that on an annual basis, can do those minutes for you, file your annual reports, do your operating agreement starting from the get-go. So yeah, we work with the entire team because we don't want to undo what you're trying to do for your client. So the communication and putting the client in the middle, so we're all working for him, is very important. And everyone is different and in a different journey, but we don't cookie cutter it, right? Yes, there's commonality and everything, but we start, what is your situation? Where are you? We look back, we look forward. And do you work with an attorney? We look at estate planning. Do you have a trust? Do you have children? What is your exit strategy? Scary. I had a client, a prospect that came to me for consulting that's selling his business, a corporation, a C corporation, and his primary home is inside the C Corp. Worked with a CPA for the past 9 years. Why would you have your primary home in your C Corp? Now you're selling your C Corp and the buyer's going to be your landlord. So, I mean, it's scary, right? But there's all types of people out there, and it's kind of hard for the taxpayer to determine who's good and who is not good for them. But I think, like what you said earlier, if I'm in real estate and you are doing similar to where I am, then you can kind of like understand me a little bit better. Mm-hmm. So when we meet with a client, I'm interviewing the client to see if I'm going to be a good fit for them, but they're interviewing me to see if, like, what are our similarities? Are you going to understand where I'm coming from? Or you're just going to be, giving me just the same advice as everyone, because they're looking for a little bit more. They're smarter now, and they want a little more, not just accounting and prepare my tax return, but what else can you do? And if you understand me, and if we have similarity, then that's kind of like a better relationship and a more fruitful relationship that can be good for both.
I love that. I feel like that's a good ending. Do you have any more questions?
No, this is super, super valuable. I did have another technical question, which is that, a few years back when the Tax Cuts and Jobs Act was enacted, there was a doubling of the standard deductions. I've heard people opine that, well, now I don't have to really keep track of my stuff. I'll just take the standard deduction and be done with it. But those kind of general statements always make me nervous because I think they're missing a lot in between. So I would love your opinion on that, because there were so many changes, and it looks like it's going to be extended permanently, perhaps, with this quote unquote big beautiful bill. And so, I would love to educate our audience on your opinion on that.
Yeah, the biggest thing that came out of that, which I think was a mistake for some, was the pass-through businesses like your S corps and partnerships went to a C corp. Where they revoked their S election, went to a C corp, where they could pay a flat 21%. But C corps pay a state tax also that S corps do not, and pass-throughs that are owned individually do not. And also, when you distribute the money to you, like your earnings, and a C corp, it gets taxed again as a dividend, whereas an S corp or a partnership, it's already been taxed. Those are tax-free distributions. 9 times out of 10, an S corp will always be better cost efficient tax-wise than a C corp. A C corp is good for some things. Selling your business after 5 years of holding that stock. If you were the original one, you get a 10 million exemption. I mean, there's on the capital gain, but there's a lot of different tests for that. But the law change, what you were saying about the mortgage interest and the property tax and all those itemized deductions, standard deduction are now kind of like more favorable, primarily because we're capped at the $10,000 for real estate tax, for property taxes or taxes in general.
Right.
Where we have taxpayers in other states and their state tax is a lot bigger than that. They're capped at the $10,000. Where I had a client with a house in Key Biscayne, and his property tax bill was $83,000, capped at 10. So it's beneficial for those that didn't qualify, didn't have a mortgage and stuff, yes, but for the majority, I think the itemized is still far better than the standard, but we'll see if that's permanent or not, whether that gets approved.
Yeah. Well, I only have one more question for you, and it has to do with those those medals behind you.
Uh-huh.
Can you tell us a little bit about that?
Well, I was a long distance runner. So I love the community. I love running and like how my body felt and everything. So done many, many races. And right now I just do small races. So the 5Ks, the 10Ks, I still love it. Those are just some.
I love it.
But I like to, wherever
I have a feeling there were running races. Yeah.
Wherever I visit, I'm like, oh, Colorado last September. I was there. I'm like, I did, a running race there, and it's fun. I like it. I saved my knees. I had a meniscus tear, had surgery, but I still love it. And awesome. And I'm still running. So yeah, those are running.
That's wonderful. That's great. Well, Carmen, thank you for joining us. This has been great. It's been very educational. You were so thorough and so clear in your responses, and again, guys, no shame. Okay. Get your house in order. Get your house in order. Do the right thing. I'll say one of the things that you mentioned that I thought was incredibly important is to seek support in areas where you are not an expert, in areas where you're not comfortable, in areas that really are taking away from the things that you're really good at, to focus on your business. And so, I thought that was a great piece of advice. And again, we are very appreciative that you've joined Between Two Chairs this morning.
Thank you. Thank you so much. I appreciate the opportunity of being here. Thank you.
Thanks, Carmen. And we're going to have all of her contact information, website, etc., so that you can go make an appointment, the no shame appointment.
The no shame appointment.
The no shame meeting. And all of her online resources will be in the show notes. Thank you, Carmen. And thank you, everyone, for joining us.
Yeah. Bye, everybody.
Bye-bye.